Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. I live life on the edge. I wear white after the holidays, okay? This is not really white, it's off-white. Hey, if you're new to the page, go ahead and hit the like, subscribe, notification bell. Make sure all is checked. If you've been rolling with me for a while, hit that like button. Right. Make sure that you guys check out the top link below. The top link below. Stock up you. Stop jumping out of planes and not knowing how the parachute works. Okay. So make sure you get your lesson by joining Stock Up You. Pay hundreds to save thousands to make tens of thousands, right? And then make sure you guys check out Moo. Actually, I want you guys to check out Moo, right? Make sure that's the third link below because that's where I'm going to be doing my crypto mining company portfolio. All right, let's get into what happened today. What happened today? Right? The market took off green. It was going good. Everything was fine. The Dow, S&P, NASDAQ were all up green till about 10 a.m., as you can see there. And then it tanked and then it dipped. See that? So what happened was we had a report come out. Remember, some more data came out. Let's see where we can find that is. Here's what happened. U.S. consumer sentiment drops sharply in October to the lowest level since May, right? Let's see here. Look at the Reuters report. Now, here in the Reuters report, you could see that the consumer sentiment index fell to 63, right, in October. Inflation expectations rise, so the market is still having its eye on what? Inflation. It's the boogeyman that won't die. All right. Import prices increased to 0.1% in September, and core import prices fall 0.1%. And so we have all of this still inflation data coming in that's still spooking the market. All right. So this morning, I spent all of my time this morning in the Patreon with the guys, right? That's going to be the second link below. Make sure you guys check out the Patreon. It's not just me, but it's the other guys. It's myself, Mo, Keenan, and Stocks with Josh, giving you all of our best plays, all right? So you're not just getting one, you're getting them all. So it's 3 links I want you guys to check out. All right, let's keep it going. What else is happening? Well, this market has proven itself to be strong and resilient. This market has proven itself to be strong and resilient. Why? We had a hot PPI and the market was still strong. It rebounded. It was like, We had a market CPI, so producers price index, consumer price index, market still says, Then we had a strong job market, surprisingly strong job markets. And the market still, the market still shrugged that off. It just keeps shrugging this stuff off. And then what? We got not one war, we got 2 major wars going on, right? We got the war in Israel, and they were attacked. And then we have the other war, right? Putin attacking, So all of this stuff is going on. I don't even like to even say these words. So that's why I'm very cautious because you guys, man, being on social media, they just certain words trigger certain things and then they start searching to make sure you say everything right. So when I pull back, then that's why anyway, let's keep it going. All right. So then we have the bond yields are just sky high, right? Market is still just like bulling through all of this bad data. And then of course the last couple of days, we had a little sell-off, right? A little sell-off, right? And so there's a lot that's going on. I'm not even going to talk about this joke, which is more than 71 million Americans will see a 3.2% increase in their Social Security benefits and supplement security income, SSI payments, right? the average amount that the average American on Social Security that's going to get is enough to pretty much go to McDonald's. All right. I don't even want to get in that. We're not even going to touch that. Okay. So let's look at some of the things that is happening, right? Big banks have started their earnings. And it's not so much of the big banks that we're looking for, but the regional banks will be starting, I believe, next week. And remember, the regional banks show themselves to be a weak, wet, and soggy house of cards. And it showed how bad our financial structure is here in the banking system with these regional banks that couldn't pass any stress tests. They couldn't cover, you know, it was just bad, guys. We don't even, I definitely don't want to go back into that because you guys saw me. That was I would say that was my biggest loss. I made money and then I lost money being greedy on a regional bank, right? And so we know that these regional banks, I made my money back, y'all. We know that these regional banks are not good. They're not safe and they're not sturdy. And so I'm very interested to see what's going to happen in these regional banks. You guys let me know. Will they have fixed themselves? Remember, they had these bailouts from the bigger banks that raised billions of dollars in days to bail out these failing banks because they did not want a run on the banks, right? So we had all of this stuff going on, and there may be opportunities to make some money in the banking, in the regional banks, right? The question is, will these banks prove themselves to be strong or weak? The bigger banks are doing okay, but the smaller regional banks, they're just too risky, right? So let's take a listen to this right quick.
Because there are some in the camp that say the lags are gone. Everything's priced in immediately because of forward guidance and so forth. And I don't know. I've never quite bought it, but I don't think you're a buyer of that narrative.
No, it doesn't make much sense to me. And the same people are telling us that the economy's less rate sensitive now because everybody locked in low mortgage rates a few years ago. Well, if anything, that means the lags are still there, but they're potentially longer. So it's just not a coherent argument. We look back at history, and what history says is the lags are there, they're long, and they're variable. If you're looking at something like the yield curve or money supply figures. And, these indicators started inflecting, just over a year ago now. And so we're moving into a zone here where things start to break. Now, look, I admit, economy's held up better than I expected this year, especially after the regional banking crisis started in March of this year. But the fact of the matter is that I think we're headed into more difficult waters here as we move into Q4. Q3 looks fine, but it's behind us now.
I like what you.
So let's talk about that for a minute, good people. Where do we think we're heading? Like this gentleman said, where do we think we're headed in Q4? Now, you guys know that I've been saying that there's a possibility that Q4, for those of you that are new, could we could wind up closing the year higher. If this market remains resilient like it is, we absolutely could. As a matter of fact, 70% of the time we can. But there are some things, if you listen to the different talking heads, one will be strong on one end and one will be strong on another end. Meaning one will be hawkish, one will be bearish, right? One will be bearish, one will be bullish. And so it's really up to you. And I think that we really have to, and I'm going to sound like the Fed, we really have to be data dependent. We have to see what these numbers are. We have to see if the Fed, in fact, will go up another 25 basis points in November, right? To determine what's going to happen. Right now, it's all a guess game, including myself. I can't predict what's going to happen at the end of the year, but I can look back and see that over 70% of the times it does end up higher, even with a dip. And you guys know that I've been saying that all of September and the first 2 weeks of October were going to be choppy. And that's exactly what happened. It was extremely choppy. For most of you guys, it was a better choice not to trade at all. And that's what I said, because it was a lot of money made, but more people that were new lost money than made money. So sometimes the best trade is not taking a trade at all and looking where you could, buy more longer term stocks, right? Or longer term positions, right? So I just wanted to say that, it's still a good possibility that we could end this year higher, but I do believe that we have a coming to Jesus meeting coming in 2024. When? I have no clue. And remember, our politicians here in the United States has kicked the can down the road, and it was a Band-Aid on a gunshot wound, right? And we still have a debt ceiling problem that's coming back when? In November, right? So I also wanted to talk about this. Dollar General stock jumped up, all right? It brought back its former CEO, and Dollar General came back roaring today, over 10% at some point, and it pulled back. And, after hours, it's not down by much. I would call that flat, but Dollar General is one of the stock that perform well when? During a recession or during hard times, okay? And so I may be, adding to Dollar General for some long-term positions. I decided to wait today because it ran up too much too quick on this announcement, all right? And so it could be a pullback Monday. I'm not saying it will, but it could be a pullback Monday, and I will start to slowly add some to my positions just as a hedge, okay? So you guys also know that I've been talking about Mara and Riot. Let's look at Mara. I want to show you guys this also. Here's what I'm waiting on, right? Now, as you can see, Mara is actually killing it right now after hours. It's up almost 3% after hours. Wow, that just happened while I was filming this. But we're in this range where it pops up, it jumps up. So it closed at 771, but after hours, it's 794, right? But all crypto has done a little bounce today, okay? So, but here's what I'm waiting on long term before the halving. I'm waiting on it to come down to the $5-ish range. So I don't mean 5 on the head, 5-ish. So when it goes under $6, me personally, I'll probably start to accumulate there, right? So just think that we're still up about 57%, right? And so that's a lot, right? And so I believe that there's still room to come down, okay? Still room to come down. So what I want you guys to do, there's 3 links I want you to follow below. And one is Moomoo. That's going to be the 3rd link below. That's where I'll be putting together my crypto mining portfolio. It will be in Moomoo. Okay. After that, I want you to check out the Patreon. That's going to be the 2nd link below. So you got Mo, myself, Josh, and Keenan over there killing it. It was a lot of people made a lot of money today. All right. And then lastly, but definitely, well, not least, should I say, we want you guys to, most of you guys that are following me that are new, if you've been investing since COVID, you need to spend hundreds of dollars to save and make thousands of dollars by learning about the stock market. This is Stock Up You. I put this together just for you. Let myself, Stocks with Josh, Keenan Grace, Mommy Trader, and Stock Curry teach you about the overall stock market so you can be a better trader. All right? If you haven't, hit that like, subscribe, and notification bell and all. Please do that right now. You have a blessed weekend. We will see you later. Live, love, laugh, and learn.